Good morning. No change by the Bank of Canada at this morning's interest rate announcement. It wasn't too long ago, just leading into Christmas, where this interest rate meeting was expected to be the first rate cut. Fast forward 1 month into the year, that can got kicked down the road quickly to where it stands now, the summer. If I had to guess, I would bet on the rate cuts happening later than expected, as higher for longer continues to be the name of the game. On the jobs front in Canada, the unemployment rate has risen to 6.1%. That's a 7-year high. The employment rate is falling, and that's the seventh straight monthly decline. And also, average hourly wage earnings they're consistently high at 5.1%, which is a problem for inflation. That means workers are demanding higher wages, which falls onto the backs of consumers. With the rise in commodity prices and oil over the last few months, it's really apparent how sticky inflation is proving to be. And do you remember 3 years ago when all we heard was inflation's transitory, it's a one-time boom? Certainly not the case right now. I mean, the Bank of Canada doesn't expect inflation to hit 2% until next year. A kind of speech of note came out from the Bank of Canada two weeks ago. Not a warning, really. A national emergency was claimed on the productivity front. And you could think of productivity as the economic output per unit of labor, so GDP per working body. Part of the issue outlined by the Bank of Canada is how when productivity is weak, it makes their job of controlling inflation harder. When workers are not as productive as other countries, companies have to pass the higher wages onto the backs of consumer, higher costs onto the back of consumer, which can make controlling inflation much more difficult. We need greater business investment. We need more competition in Canada so that companies can absorb the rising costs and not just pass that off in the form of higher prices. On the home affordability front, I mean, we have provincial and federal governments announcing measures to try and help housing affordability. But let's make no mistake, there's a massive supply-demand imbalance in Canada. I mean, you can't just flip a switch and magically create, millions of homes, certainly not with waning business investment. On the interest rate front, I mean, rates have continued to kind of bounce around, but are settling on the higher side right now. I mean, you have 3-year fixed rates in the low 5% mark. I mean, the last 2 weeks we've kind of seen the promo pricing come up a few basis points. That's about a 1% difference from what you could get on a variable rate. If you have a mortgage coming up for renewal, certainly get in touch now because there's been a lot of interest rate volatility. There's certainly no harm in us locking something in early and then waiting to see what happens. But yeah, if you'd like to talk more, please get in touch. I'd love to talk about mortgage renewals, or if you're planning on buying, talking about the market and industry trends. So please get in touch and have a great day.